Our top story this morning, one of the nation's largest commercial lenders, CIT, says it probably won't get a government bailout, and that has increased talk that the company will declare bankruptcy. CIT is running short of cash and has $1 billion worth of bonds maturing next month. The government gave CIT $2.3 billion back in December, but regulators have balked at putting more taxpayer dollars at risk. Analysts say CIT does not fall under the too big to fail category.
I don't think CIT needs to exist. Their assets can be handled within the banking system. And you've seen that as Lehman has failed, as Bear Stearns has failed. Those assets are being repatriated. The whole shadow market banking system has been transferred to the government's balance sheet, but eventually as they unwind the liquidity support programs, it's going to be repatriated back into the banking system.
CIT loans money to about 1 million small and medium-sized companies. The head of the National Retail Federation said a CIT failure can't be allowed to happen when retailers are already struggling to survive. Now, for more on what Wall Street is saying about the latest CIT developments, we're going to go now to our markets desk, where John Ehrlichman has more. John?
And Scarlett, you just included those comments from Charles Peabody addressing that issue, too big to fail. Is CIT in that category? A reminder that this is a company that lends to roughly 1 million small mid-sized companies. However, we did speak with Jason Mudrick, Bloomberg News did, and he pointed to the strength of the financing business to the retail category as a business that would be appealing potentially to some of the competitors, and one of the reasons why he's not convinced this would lead to an entire systemic risk. However, at the same time, overnight we did get some commentary from Give Me Credit saying if some of these assets were attractive, then why not already have a deal on the table as we get closer to some of these growing concerns out there. What we have talked about is the stock price. We know that the shares were halted yesterday. We've also been talking a whole lot about the activity in the bonds and obviously some of the financing concerns in the near term. I did want to highlight very quickly some of the notes for CIT that mature in August, in the middle of August, which had a dramatic drop on Monday, more than 20% down. What is interesting is that they actually have risen somewhat over the course of the week, and the Bloomberg News team was also reporting, Scarlett, yesterday that we'd actually seen the CDS pricing come down from its peak level of the week, which was on Wednesday.
Now, John, meanwhile, the CIT story does seem to have an influence on the currency trading as well.
Right, and you were talking about the Treasury influence this morning. If we take a look at the euro against the dollar, weakness in the euro against the dollar this morning. We've seen weakness as well in the euro against the yen. Some interest in going into some of those safe haven currencies as this story unfolds. Scarlett?
So risk aversion is back on. Thanks very much, John Ehrlichman.